We have completed some of the RCM basis supply in the previous classes. In this class, we'll move on to the rest of the RCM basis calculations or supply of services falling under RCM basis. Now, GTA agencies, goods transport agencies, GTA services. In this case, okay, transport agencies supplying the goods, where RCM basis will be applicable provided the recipient being a factory or society or cooperative society and any registered person under CGST, HGST, UTGST, IGST, body corporate, partnership firm, and AOP and casual taxable persons, CTP. If the recipients are these category of persons, then RCM basis will be applicable. RCM basis will be applicable. Clear? What is called factory? A factory registered under Factories Act, society registered under Societies Registration Act, cooperative society established by the law, even any other registered person under this particular act, section 22 or 24 registration. Body corporate can also be falling under this case, and partnership firm. In case of the recipient being the partnership firm, firm may be registered or unregistered, doesn't matter. In all other cases registered, but in the case of firm, the firm may be registered or may not be registered. AOP and casual taxable persons, who are called CTP, casual taxable person. Those who are doing taxable supply business for a temporary period, maybe 3 months to 6 months. They can apply for a temporary registration for the 3 to 6 months. Thereafter, the registration is cancelled. That they are called as CTP, casual taxable persons. If the GTA, a person who has a lorry, renders transport services for transporting the goods to any of these category of the recipients, then GST will be payable by the recipient under RCM. Factory, society, cooperative society, registered persons and body corporate in case of firm may be registered or unregistered, AOP and CTP. All these category of recipients will be liable to pay the GST under RCM basis. They have to get the service and make the payment, and they have to pay the GST directly to the government. Is that okay? So, supply of service is there, and consideration is payable, and the tax is also payable directly to the government of India by recipient themselves. Now, in case of GTA, 2 additional points are going to be discussed. If the service provided to central or state government departments or establishments, local agencies, government agencies, in these cases, RCM basis will not be applicable. Provided, in some cases, forward charge is applicable, RCM not applicable if supplier asks for it. Okay, supplier can go for paying the tax. So GTA render services to central government or state government establishments, departments, local authority, government agencies. And government agencies may also be registered person. In the previous class, we have seen that if the recipient being the registered person, GST will be payable under RCM basis. But provided, in this case, this government agency is being the registered person, the registration is only for the TDS and TCS under section 51. Okay. In that case, he has not done any of the taxable supply, then RCM basis will not be applicable in this case. Is that okay? Provided they are registered only for the tax deduction under section 51. Here, registered person means persons registered under section 22 and 24. We never bother about the registration done under section 51. So under section 51 is for the TDS purpose only. Central or state government departments or establishments, local authorities, government agencies, though they may be registered under section 51, not required to pay under RCM basis, and it may be totally exempted. Even GTA will also not pay, and recipient will also not pay. Suppose GTA being the registered person and he is also paying the tax under forward charge, rendered service to various recipient, supply of services, especially GTA services. If GTA apps for the forward charge, then GTA can pay the GST to Government of India directly. It's an option. It is option only. See, if the GTA registered under CGST Act and apps to pay the tax under forward charge, in that case, recipient just pays the consideration, GST is payable by the GTA. It is option. It is option. In all other cases, we have not seen such an options, but in this case, we are able to discuss that another option also. Okay, condition, GTA charges GST on the invoice while billing. Supply of services may be 10 lakhs and GST on that being 1.8 lakhs. That's how registered person, the GTA raises the invoice, then it's okay. And GTA makes a prescribed declaration of the tax invoice and confirming forward charge application. So he has to state that I'm going to use the forward charge only. If he says so, then forward charge will be applicable. RCM is now not applicable in this case. Is that clear? Now, apart from that, one more option is also available for the GTA cases. Only for GTA, we have three blocks. One is RCM, pure RCM cases. Second one being optional RCM basis, as well as the exemption case. The third case is all about what happens in case of forward and RCM basis. Okay. Now, here, person liable to pay tax under GTA services. Okay, GTA to recipient. What supply of service? Supply of service being transport supply. Transport supply. Now, two scenarios are there. Two scenarios are there. Okay. If the GST being payable under forward charge, okay, invoices prepaid by GTA, consideration being 10 lakhs, and GST payable on that being at the rate of 12%. At the rate of 12%. If the recipient gets a service from this GTA by paying 12% GST, this recipient has the option to get the ITC back. Scenario 1. Full tax. Or consideration being 10 lakhs and GST is payable at nominal rate, say 5%, not 12%. Okay. Only 12%. And in this case, supplier being the body corporate, recipient is not being the body corporate, other than body corporate. In this case, ITC not available. If full tax 12% is paid under forward charge, recipient is eligible to claim the ITC. If the supplier charges only 5% and he is being the body corporate, recipient not being the body corporate will not be eligible for the GST. ITC credit will not be available. Clear? Now, third scenario where 5% is paid, supplier being other than body corporate, recipient being the body corporate. Recipient being the body corporate. See the difference between these two. This third scenario where it is applicable for the RCM basis. RCM basis. Where recipient has to pay. Okay, recipient has to pay. So supplier is other than body corporate, recipient being the body corporate, and GST is payable by recipient being only 5%. So a normal provision will be applicable when forward charge applies as well as 12% GST is payable. Normal provision means whenever I get any input supply of services or goods, any tax paid on can be refunded in the name of ITC. This is possible only when full tax is paid. Only a partial tax like 5% is there, ITC is not available. That too, the partial tax 5% will be applicable under forward charge as well as reverse charge. In case supplier being the body corporate, recipient being other than body corporate, forward charge 5% will be applicable. ITC is not available. If the supplier being other than body corporate, recipient being the body corporate, and he actually pays the tax under RCM, then 5% only will be payable. No ITC is available. Only when you pay the full tax, ITC is available. Partial tax, you will not be eligible for the ITC. Is that clear? Hope you will be now able to understand GTA cases. So as already told you in the previous class, all the other things are grouped easily. You can easily link what are the scenario. But in the GTA, you need to have so much of additional points also along with the normal RCM provisions. Now, ABC Transporters and Unregistered Goods Transport Agency, ABC being the GTA provider, provides transportation services by road to XYZ industries. XYZ. So he is being, ABC is not being registered person, and recipient being the registered person. Who is liable to pay the GST and at what rate? As already told you, if the recipient being the registered person, automatically RCM basis will be applicable. Under what section? Section 9, class 3. Okay, as per section 9, class 3, all the listed RCM basis here we covered no is nothing but section 9, class 3. 9, class 4 is totally different. Okay, if the supplier being the unregistered, recipient being the registered, automatically RCM will be applicable only in case the recipient being the registered and supplier being the unregistered. Currently, it's not notified. Small item will be available, so no need to worry about the 9 class 4. You will focus only 9 class 3. 9 class 3 is very clear. A list of services given here. Those things are falling here. And list of goods also be applicable under section 9 class 3. Okay, supply of goods. But that is not applicable for your examination. No need to worry about that. Okay. And ABC Transporter is unregistered. And XYZ Industries is registered at GST. The liability to pay the GST falls on XYZ Industries Limited. And the applicable GST rate being 5% without ITC. So he has the option to pay either 5% or 12%. Okay. If he pays only 5%, he will not get any ITC benefit. If he pays at the rate of 12%, he has the benefit to claim the ITC. With ITC apted by the GTA under forward charge mechanism. This 12% will be applicable only in case of forward charge. Any of this forward charge is not applicable. So we have to confine this one only. RCM basis 5% is applicable. Of course, ITC is not available. XYZ Industries is liable to pay GST at the rate of 5% under RCM. This 12% will be applicable only which method? Forward charge, but forward charge is applicable without ITC. Here we don't claim the ITC. Clear? GTA has not apted for the forward charge. GTA has not apted for the forward charge. Unregistered, definitely forward charge will not be applicable. Legal services, arbitral tribunal services, sponsorship services also completed in the previous class. Now, fifth point. Government services to business entities. Government services to business entities. Okay. Now, central government, state government, union territory, and local authority rendering services to whom? Any business entity, not for individual case, most probably business entity. Okay. In this case, RCM basis will be applicable. RCM basis will be applicable. What sort of services rendered by the central government to business entity? Government's land may be given for rental to conduct the business, other things, right? Okay, maybe exhibition, maybe some shopping complex let out for the business entity for running their shops and all. So those things will come under this case. Okay, here, especially those things are removed. General services excluding renting of immobile property and some specified services, leaving these two. Okay, if rental services is given or some other specified services, those things not covered. Then is it exempted? No, sir. We'll study in the next case 5A. So leaving that, it is confined under section under this fifth listing. 5A rental will come. Okay, whatever the service may be. Exclusion being renting of immobile property. Specified services means Department of Post and Ministry of Railway Services. Services related to aircraft or vessels within or outside port or airport precincts. Transport of goods or passenger. In these cases, GST is not leviable. RCM basis will not be applicable. Is that okay? Department of Post. Okay, if you are sending any speed post and all, GST is not applicable. RCM basis is not applicable. In case of speed post, GST is collected and paid by the department itself, postal department itself. It's not collected from you. So some of the specific services, the specific services are listed here: postal, railway, and port related services and transport of goods and passenger. In these cases, forward charge is applicable wherever it is applicable. Okay, wherever it is applicable, forward charges. Otherwise, all other charges done by the government to the business entity will be coming under RCM basis. Is that okay? For example, in case of you apply for the government, right? Even license, driving license and all, those services rendered by the government only, no. Some services predominantly exempted. Leaving other services, you still get lots of services from the government. Not being these services, if you are being the business entity getting the services from the government, then RCM basis is applicable. Okay. Now, we'll deal with renting. So, renting is separately given here. That's why we exempted there in the fifth listing. So, 5A, 5AA, 5AB, 5B, 5C. All these things are similar, like related to the immobile assets. You can easily link all these things. Let me finish off one after one slowly here. Central government, state government, and union territory, local authority. Rendering service. Okay. And to whom? To any registered person. It's not required to be business entity, any registered person. Okay. Not being railways. Not being railways. Okay. In this case, RCM basis will be applicable. Number one. What service? Renting of immobile property. Second one being any person, Mr. A let out the property to B being the registered person, and what service? Renting. Renting of what? Residential dwelling. Residential dwelling. Even the house property is let out for the residential purpose, if the recipient being the registered person. If you are falling under the GST, you have personally a registration number with the GST. If you are paying any rent for the residential dwelling, for example, XYZ firm, okay, they are being the registered person and partnership firm. In order to accommodate their guest partners now and then when they visit to their own head office, they got a residential house property rental for the residential purpose. Now the rent payable for this house property will be subject to GST, that to RCM basis. RCM basis. Sir, I am living in my own rental premises. Sir, do I want to pay the GST? No need. GST is not applicable for the individual residential dwelling purpose. If you are being the registered person and you procure or you take any premises in rental, and where if you are paying the rent, automatically RCM basis will be applicable. Is that clear? Hope you'll be now able to understand. Second point. This will be renting of any immovable property. This is residential dwelling. Okay. Now, in case any unregistered person, A being the unregistered person, and letting out to B, he is being the registered person. What is that? Again, renting other than immovable property. Okay. Renting, not being the residential dwelling purpose. Okay. So in this case, renting of other immovable property, not residential purpose. In this case also, provided by unregistered person, recipient being the registered person, automatically RCM basis will be applicable. RCM basis will be applicable. So government rendering, the first case we have seen, whatever the services given by the government to business entity, whenever I say the term government, always central government, state government, local authority and government union territory will come. Specifically, I will say sometimes central government, it represents only central government. Okay. And sometimes I will include the government agencies as well as government entities and all. You have to be careful with those things. In the first scenario, we never bother about the renting of immovable property or some specified services like post, Ministry of Railway Services and port related services, transports of goods and passengers. In this case, if the recipient being the business entity only, then RCM is applicable. Next to renting services, if the recipient being the registered person, not necessarily being the business entity, or it may be if you are being the registered person, you have to pay the GST under RCM basis. And recipient being supplier being any person, but the recipient being the registered person, getting the renting of residential dwelling purpose, then automatically GST will be applicable under RCM basis. Other than immovable property, if it is let out by unregistered person to the registered person, then RCM basis will be applicable. And now 5B, 5B and 5C, long-term lease of land. All these things are related to what? Immovable property or some other property other than immovable property we have seen. That's why I group this all in single shot. Long-term lease of land, 30 years or more. Okay. Provided by landowner, person leasing land and recipient being the promoter. Okay. C, A, B. What service is provided? Long-term lease of land. Long-term lease means the tenure being 30 years or more. And A being the landowner, B being the promoter for construction of project. Is that okay? Now, the payment for this being the consideration being the lease payment. Lease payment. Is that okay? See, the landowner A leases his own land for more than 30 years. B promotes any residential property, commercial property or any other commercial establishment for 30 or 40 years, right? Okay, promoter. Later the promoter can let out to some third party. That's a separate part. For letting out or leasing out the land only, not the building, only land only, for that lease payment is done by promoter. Automatically RCM payment will be applicable. That lease payment usually be an amount payable by the lessee upfront amount, usually named as premium, salami, price or development charges and or periodic rent. All these things are falling under upfront amount. Is that okay? So in this case, RCM basis will be applicable. RCM basis will be applicable. Exemptions. Long-term lease with upfront premium is exempt if the flats constructed on leased land are sold before the completion of certificate is issued and the tax is paid on the sale. Okay. So, if the land is leased, B, in that land, what he does, If he transfers the flats after the getting of completion certificate, GST is not applicable. But he transfers before the completion of certificate, then automatically GST is applicable. As finally there is a GST, no, then RCM basis is escaped. Okay. So long-term lease with upfront premium is exempt if the flats constructed on leased land are sold before the completion certificate is issued and tax is paid on the sale. On sale, GST is paid. Then RCM basis is escaped. Clear? And withdrawal of exemption. Withdrawal of exemption. Okay. So before I go this point, let me finish up this one. I missed 5B. Okay. Transfer of development rights or floor space index. A being the landowner, B being the promoter. He transfers what? Development rights or floor space index. For that, any consideration is payable. Okay. Naturally, what happens? RCM basis will be applicable. Now, what is called TDR or FSI? Transfer of development rights. A actually hands over his land to B. Not only that, over the land, A proposes to construct flats having around 20 units. 20 units. He got the approval and all, but he has no money to construct. So he has the approval. Now, as he has the approval, he can construct as he wishes, but running short of cash. Simply A transfers his the development rights. The land can be developed into the flats of 20 units to B. Now, with that rights, B can construct. So A transfers the development rights to B. And floor space index is nothing but whenever you want to construct, you know, if you have 2,400 square feet area based on the load width, means road width, okay, you are allowed to construct 2.5 times or 4 times like. Okay, if the plot is situated in a road having 100 feet, 80 feet width, no, you can construct 4 times of the floor space. If the road space is very limited, probably 30 feet, 40 feet, you know, you are allowed to construct only 2.5 times. 2.5 times means 2,400 means you can construct at the maximum 6,000, like 6,000, not beyond this. Means ground floor, first floor. In the second floor, you will be able to construct only one room or half room. So you might have seen in most of the cases, you know, especially in Chennai, though they may be well off to construct any level, they constructed only 2 floors. In the 3rd floor, they usually shed. I asked them, why don't you construct that as a floor so that it will be convenient? No, no, sir, we are not allowed to construct more than 2.5 times of the floor. So whatever the area we have, we cannot construct the concrete building beyond 2.4 times of the real floor space. So here you have to give space to all the 4 sides, like setback area, and then 1 floor, 2nd floor, and 3rd floor half. That's all. More than that you cannot construct. So the owner of the land giving that floor space index, to this extent of floor, you can convert this into the flats. That permission to be promoted to construct the flats. For that, A gets the consideration from B and RCM basis will be applicable. So landowner, what he transfers, person transferring TDR and FSI. TDR and FSI. Provided, if the flats after the construction, before getting the construction completion certificate, if B transfers, GST is applicable, no. In that case, GST on RCM basis is escaped. So supply of TDR and FSI is exempt if constructed flats are sold before the issuance of the completion certificate and the tax paid thereon. Okay. So if the before the completion, so A just transfers what? TDR and FSI. Using the TDR and FSI, promoter constructs as per the size specified or approval given, and he can sell. When he sells, before getting approval, he gets some amount Slowly, after a step-by-step construction, he gets the consideration installment. Automatically, GST is applicable, no? So then RCM is not applicable. Provided he completes and sells, then RCM basis will be applicable. Now, now, provided RCM is exempted, while constructing your flats, okay. So what do? You purchase lots of input, what cement and machines and all, right? So while purchasing all these things for construction, you need to pay the GST on this. You need to pay the GST. GST payable under forward charge. Forward charge. If you want to get escaped from RCM, while constructing the GST, 2 points to be noted. The house property flats, before getting completion certificate sold and GST is paid, then RCM not required. Apart from that, while constructing, you put lots of inputs, right? Cement, sand and stones, whatever it means, steel and all. For that, you need to pay what? GST under forward charge. Is that okay? If forward charge is missing, sir, what happens? Then RCM basis, you have to pay the tax, right? Withdrawal of exemption. If flats are sold after the completion certificate, provided you escaped RCM basis, you didn't pay the tax, but you sold only after the completion certificate, then automatically you already escaped. No, you just told not to pay the GST under RCM basis because you are going to pay the GST at the time of sale. But at the time of sale, you didn't pay the GST. Automatically, the exemption given earlier is withdrawn. Now it's your duty to pay a small number as you are violating. 1% value for the affordable houses and 5% value for the non-affordable housing. The flats you constructed, will be classifiable into the affordable housing and non-affordable housing. If the flats being the affordable housing and GST is not payable on sale of the flats, then automatically 1% value will be payable as a withdrawal of the exemption. And FSI and A and B, RCM basis is paid, no problem. No problem. In scenario 2, A to B, TDR and FSI, you escape from RCM. But finally, you have to pay GST on sale of flat. Okay. But GST on sale not required. Why? Because sale happens after completion certificate. This is sale happens before completion certificate. Before completion certificate, GST is applicable, so very happy. So what about the scenario for RCM, sir? No problem. But in this case, you have violated. You have not paid the GST under RCM basis while getting the TDR and FSI. Even after completion of flats while selling, you are not paying the GST. So automatically what happens, 1% or 5% GST will be payable now. Depending upon the house nature, whether the house being the affordable house or non-affordable house. Okay, non-affordable house. So there is a scheme called affordable housing for all scheme. Okay, Pradhan Mantri schemes are there, housing for all. So as per the scheme, probably around 30 lakhs or 35 lakhs, the exact number I'm not aware about that. So if the flat value itself is within that limit, those things are called affordable house that all can afford for purchasing those house properties. If the flats constructed being the affordable housing and after the completion of certificate, if it is sold, then automatically GST is escaped, so you have to pay only 1%. If the house not being the affordable houses, probably 1 crore, 2 crores worth house properties, automatically what happens? You have to pay 5% GST in this case, right? 5% the value of for a non-affordable housing. Now, RCM, in case of exemption is withdrawn, the tax liability on TDR FSI is shifted from the landowner to the builder under RCM. Now, this burden that TDR FSI tax also be shifted in the hands of RCM, means builder's head. Okay, the liability to pay this in the hands of the builder only. The landowner is also not responsible. The flats owner is also not responsible. Who is responsible here? Only the builder is responsible. So no problem. Pay the RCM. Do your business. No problem. But if you say that, sir, I don't want to pay the RCM, sir. Anyhow, I am going to pay the GST at the time of selling the flats. Okay, you are allowed to get escape. But you are exempted later on. You are not paying the GST on sale means it's a violation only now. In that case, either 1% or 5% will be payable depending upon the house nature, whether it's affordable houses or non-affordable houses. Is that clear? Now, the same points will be applicable in leasing also. Withdrawal of exemption, TDR and TSI. The thing what we have learned earlier can be linked here also. You don't need to separately study. 5B will be applicable here also. Clear? So, 5 being any supply of services or services done by the government to business entity, government services, not being the renting of immobile property, postal, railways, and port, transport of goods and passenger. Next case being renting of immobile property scenario, where recipient being registered person under GST and residential dwelling. Residential dwelling is applicable only when it is going to be received by a registered person. Then GST is applicable under RCM basis. Renting of other immobile, other than immobile property, if the supply being done by unregistered person, recipient being the registered person, then automatically GST is applicable under RCM basis. And TDR and FSI transfer usually exempted, provided RCM basis is applicable. Even that RCM basis is also not required when he assures that the GST is not payable. GST is payable on sale of the completed flats. Okay, but provided if he fails to do so, automatically a penalty like 1% and 5% will be leviable, and responsibility will be in the heads of the builder. In the heads of the builder. Same happens in case of land lease. So earlier one being the TDR and FSI, here being the land lease. Clear? So we have completed all these aspects here. Now, OIDAR services, online information database access and retrieval services. Okay, services supplied by A not being in India, not being India. Okay, recipient being any person. Okay, who has to pay the tax on this? Any taxable person. Okay, now who are called non-taxable person? Non-taxable person, government, local authority, or any individual, okay, unregistered person. These are called non-taxable person. Other than that, anybody imports or gets online information and database access and retrieval services, OIDAR services. You understand? Okay. Now, predominantly this person can be business entity registered under GST. He is supposed to pay the GST under RCM basis. Supplier being outside India. Okay, if the supplier being in India, automatically forward charge will be applicable. What happens if I am rendering online services, okay, online coaching, other than in Tamil Nadu state, then automatically forward charge will be applicable. I will collect the GST. Okay, if I am selling any recorded classes, right? So I stored that in cloud and allowing my students to access those videos stored in cloud, you know, that's what about online information database access and retrieval. You can access and see. Whatever the fees you pay me, no, for that forward charge will be applicable. Forward charge will be applicable. If the same faculty is outside India, okay, I'm getting some specialized training program from one of the tutor from US who gives that video to access. So I'm using that videos for my learning purpose. Further, I'm paying the consideration. Then I automatically liable to pay the GST under RCM basis, provided I'm being the business entity and registered person, not being the individual person, Is that okay? So, provided by a person located in non-taxable territory, if I am being in India, no problem, forward charge is applicable. If I am rendering the service as I am in India, I have to register myself under GST and I have to pay the GST and forward charge. If the supplier being outside India, then forward charge will not be applicable. RCM basis will be applicable here. And recipient, any person other than non-taxable online recipient. So any person, but not being on non-taxable online recipient. Who is called non-taxable online recipient? Government, local authority, an individual, or any other person not registered. Government, local authority, an individual, or any unregistered person. And finally, who is called registered recipient? Okay, the person who registered under GST will be called registered recipient. If he receives, then RCM basis will be applicable. Okay. Place of supply. The place of supply is in India if the recipient is registered person for the business purposes. Okay. So this place of supply you will study along with the place of supply concept later on. So if the supplier being outside India, recipient being in India, the place of supply being in India only, then GST will be leviable. What rate? CGST, GST both put together as an integrated one, IGST. IGST will be applicable. Clear? Now, 11th one, transportation of goods by vessel, ships. Okay, again, a person located in a non-taxable territory, A, who is not in India, rendering services by ship. Okay, usually B, who is in India, maybe importer. Okay, importer. That too, he is in India. So, supplier recipient both are not in India, never bother about that. Supplier and recipient both are in India, no problem, forward charges applicable. Supplier being non-resident and recipient being in India, automatically IGST will be applicable. That too payable under RCM basis. We cannot tax for a single transaction to any non-resident. We cannot ask him to register in India for the one transaction. So, in order to make him comfortably transact with India, we are relaxing him and we penalize the recipient in India. Right? Very simple. A person located in non-taxable territory. Service. Transportation of goods by vessel from outside India to the custom stations of clearances in India. What sort of services? Import service through vessels. Ship. Okay. Recipient being the importer. Taxability. The service is taxable under forward charge. This service is taxable under forward charge usually. Place of supply is India as it involves the transportation of goods into India. GST importer is liable to pay the GST on the services. Okay. Usually forward charge, but here importer has to pay no, then automatically it comes under RCM basis. Okay. Small difference. OEDR services taxable under revert charge mechanism. Transportation of goods will be forward charge only, not RCM, forward charge only, with the importer responsible for GST payment. This is RCM only. This is forward charge only. It's a uniqueness. The uniqueness here being forward charge only, but we are making B being the responsible person for payment of the tax. So automatically it comes under RCM basis like. But it may be a tricky question in your examination. Is it forward charge or RCM? You have to name this being forward charges and make the importer responsible. In the other cases, it's purely RC. He has to pay and he is responsible. Here, the payer should be the service provider, but responsibility will be in the hands of the recipient. So, make a note of this. Now, we have completed 12, 13, 14, 15 and 16 in the previous classes. Let's move on to the renting of motor vehicles. Renting of motor vehicles. Is that okay? Now, A, recipient being body corporate. Always remember, recipient being any body corporate, that too he should be in taxable territory. Taxable territory means should be in India. Where the GST is applicable? The GST is applicable in India only. Okay. In India itself, some places the GST is not applicable, like export oriented unit or special economic zone, like all those areas, those areas, this GST provisions will not be applicable. That's why it is termed as taxable territory rather than India. Now, this A provides services of what? Renting of motor vehicle. Renting. Okay. And provided by any person not being body corporate. If A being the body corporate, he is already having all the documents with him. Being the registered person, he can pay the GST, directly forward charges. If he is not being the body corporate, then automatically what happens? Recipient being the body corporate responsible for paying the GST under RCM basis. Any person who does not charge CGST at the rate of 6% in the invoice. Okay. So what about the CGST here? CGST here less than 6% or 6%. Okay. Otherwise, less than 6% case, RCM is applicable. 6% case, RCM is not applicable. So you have to understand normal tax as well as composition tax. Normal tax and composition tax. So we will be dealing that chapter also today itself. Composition levy. So usually in most of the cases 18% was the tax earlier. So currently there may be some changes. Any of that's not going to be applicable. Okay, 18%. Up to 20 lakhs, no need to pay the GST. The moment you cross 20 lakhs, you have to register and pay 18%. Seems to be a big shock. Sir, how can you make me liable to pay 18% for even a small rupee change from 20 lakhs? Give me some relaxation. Okay, up to 20 lakhs, you don't need to pay the GST. From 20 lakhs to a certain limit, rather than going for the regular tax payment, you are given the option to pay a small number. Like percentage basis taxation, you might have studied in your taxation, income tax. Okay, rather than regular tax you pay, you may be allowed to pay a small number, 6% of your amount received in account will be considered as your income. Similarly, here also you can pay only 1%, 2% like. You no need to pay the regular tax. That is called composition tax. Now you will be able to understand the logic here, why two numbers are given here. But if you are not going to be the regular taxpayer, or you are paying the tax at composition rate, means small number, recipient is not eligible for ITC. Okay, you are not paying 18%, you are paying only 2% or 3%, or the case maybe in case of service industry, it's only 6%. Okay, if I am going to register myself for a small service provider, then I need to pay only 6%, else I have to pay 18%. If I register myself for the small service provider 6%, recipient you yourself cannot eligible for ITC. If I register for regular taxpayer 18%, you can claim that 80% back as ITC. You understand? The same happens here also. If A being the service provider registered for the small taxpayer, which is less than 6%, our regular taxpayer means 6%, CGST 6 and SGST 6, so 12%. 12% is the normal limit. When the normal tax rate 12% is paid, recipient can enjoy the ITC. If the tax payment is less than 12%, definitely ITC will not be enjoyable. Already we have seen that here, right? Hope you'll be now able to understand the logic. In case of 5%, you don't get ITC benefit. The same happens in case of renting of motor vehicles. Renting of motor vehicles. Clear? Now, here renting of motor vehicles, along with the fuel, you have to rent it out. The tariff what you recover, is inclusive of fuel cost. It will not be charged separately. Okay. In this case, forward charge. A can pay 12% or 5%. 12% means 6 plus 6. 6 for CGST, another 6 for SGST. If it is not 6%, it's 2.5% and 2.5%. And ITC, allowable here, not available. Recipient cannot enjoy here. Or he can simply skip. Recipient can pay the GST under RCM basis. RCM basis at the rate of 5%. Of course, ITC is not available. Okay. This is about the tax. Okay. Tax not applicable. In case of ITC, allowed, not allowed, not allowed. Clear? GTA pays the tax under forward charge. 12% tax is paid by the GTA. Then recipient can enjoy the ITC. If it is only 5%, no ITC is available. No ITC is available. In case of reverse charge, recipient pays the tax. He can simply pay 5% when the GTA does not apt to pay tax. He has not paid the tax and he can pay the tax. Okay. So if he apts to pay the tax, the GTA apts to pay the tax, no problem. But he has two options. Either he can go for 12% or 5% options. If he goes for the 12% options, then the recipient can enjoy the benefit of ITC. And else, we cannot enjoy the benefit. If he doesn't opt for paying the tax under forward charges, we have to pay the tax under RCM basis. Is that okay? Now, 18th one, we have already studied this one, right? Similar one we have studied. It's what about lending of securities, a small variation. Priority sector lending certificate, but it's pretty different. It's a lending of securities. Lending of securities. Okay. A and B. A and B. A lends his share. It's what about letting out of the shares. A being the shareholder for TCS company. B wants the TCS company share for a couple of days. A lets out this TCS company share to B for a small consideration. The price of the share being 3,000 rupees. A rents out to B for just 30 rupees rent for the 3 days. Okay. And this 30 rupees is nothing but the consideration for letting out of the renting out of the securities. For that GST will be payable under RCM basis. Okay, you may get confusions. Why do we want to let out the securities? There's a concept called short selling. Okay, I can sell the share today without my share holding. That's called short selling. Okay, I can sell without selling, without holding. Okay, all these things are tax jargons. Okay, see, for a colloquial example, you go to a store, probably a grocery shop. You order a sack of rice. What will be the question from the grocery shop? There is no stock held by grocery shop by the time when you order. Sir, when do you want, sir? Sir, deliver to my home in the evening, sir. Evening only, no? Okay, sir, I will deliver. But grocery shop holder may not have the rice with him in the store. But he knows the price. Immediately demands, give me 1,000 rupees, sir. I will deliver in the evening. By the time he approaches the wholesaler and demands the one sack of rice to be delivered directly to you in the evening. Now he transfers the money to wholesaler and the rice is delivered to you directly. It's over. So here, grocery seller sells the grocery, rice and all without he holds. Similarly, share also in the stock market, if you go no, without share also you can sell. How? Usually any transaction happens buying and selling today. If I buy anything, I will get the share only tomorrow, not today. Similarly, if I sell any share, that will go out of my account only tomorrow, not today. This evening, I will have the share in my account. Tomorrow, it will not be in my account. For selling also, for buying also. If you ask me to get me a TCS company share, I don't have the share. You are asking for 3,000 rupees. I have mine set up. Anyhow, by this evening, it will go 2,950. With that estimation, I said 3,000 only now, sir, I will supply. I give the guarantee to supply the TCS by this day for 3,000 rupees. I collected 3,000 rupees from you. That's all. By the day end, if I go and verify the market price is 2,950, no, immediately purchase. The newly purchased TCS is supplied to you. I'll get 50 rupees. I don't have even single penny invested in the stock market. I may able to make a nice money of rupees 50, right? This is called short selling. Without share, I can sell. It's called short selling. Okay. So in the morning, if you go and see any market, stock market, okay, just go and see any stock broker's house. It will be just like a gambling shop, like it look like sometimes. Morning, no, all the persons will sell. Okay. Anyhow, in the evening, we'll purchase. What happens suddenly, you know, in the evening, rather than 2,950, if it becomes 3,100, there's a chance of reverse also. No other way. He has to supply for 3,000 rupees. No other way. He has to purchase from outside 3,100, supply for 3,100 rupees will be lost. This is another scenario. Now, what happens in the scenario? We don't get that share in the market in the evening. We don't get the stock at all. Is that situation happens? Happens. But you accepted to sell for a 3,000 rupees, right? For the share for 3,000 rupees, you accepted, but you don't have the share. You are ready to pay any amount to purchase a share in the market by the day, but you don't get the share in the market at all. Then immediately what happens now? There will be around 10 to 20% penalty. 300 or 400 rupees penalty will be leviable on you. Penalty and other charges and a bad image on you. This will be situation. Then there's an option. You have to sell, but you don't get the share. But A is willing to give his share for rental for a couple of days. 3 or 4 days later, you purchase and give it to A. That's all about lending of securities. Hope you'll be now able to understand the concept. But this is the meaning behind. But for the GST purpose, in case of lending of securities, RCM is applicable. Very simple. For the GST purpose, the topic is very simple. But to make you understand what does it mean, I have explained all these things in detail. And provided by lender, letting out is provided by the lender to the borrower. Person depositing securities in their name or an authorized person. Person borrowing securities through SEBI approved intermediary. He borrows it from SEBI approved intermediary. Then RCM basis will be applicable for the payment of tax here. B has to pay the GST. Now, so you have completed all these things. With that, RCM is over. We'll see some clarification, some explanation for the terms and all before we go for the composition levy. So In the very beginning, I started with these rates. Now you'll be able to understand these rates. These are what? Composition levy rates, not the regular. In these cases, ITC is not available. In these cases, ITC is available. Similarly, in case of goods, these are the composition levy scheme. Okay, only these things are the regular tax. If the regular tax is paid, then automatically there is a chances of ITC. Chances of ITC. Whenever it's being the composition levy, ITC is not available. So in case of GTA services, falls under 6 plus 6, 12% case. Otherwise, 2.5, 2.5, 5% case is no. That will be called as composition levy. Here, ITC is not available. Clear? Should be clear with this. Now, e-com operator. Already we studied this, right? Under e-com operator, supplier recipient, they are not responsible for paying the GST. Who has to pay the GST? E-com operator should pay the GST. So ECO is a person who owns, operates, manages electronic platform for supply of goods and services. Okay, like Flipkart, Amazon, Ola, whatever it may be. Okay, modes of supply through ECO. ECO as supplier, ECO as a facilitator. So we have two cases. Okay, so Amazon and supplier, recipient. Supplier supplies his goods through Amazon and it reaches to the recipient. This is one case. Amazon will supply its own items also to recipient. So you might have seen sometimes Amazon basics. In case of Flipkart, they have their own version like Marg and other ACs. So we too have Marg ACs. Was very cheaper when they launched this their own product. Okay, so if the others products launched through this platform, then they are called as a facilitator. If my own product is sold in my own platform, then it's called supplier. ECO directly supplies goods or services. As a facilitator, the actual supplier provides goods or services, but ECO collects the payment and deducts its commission before transferring the amount. So goods are going from here to here, and cash is remitted from R to A, and he deducts his own commission, remits 95 rupees to the supplier. This is one platform. This is another one. This will be called as ECO as supplier. This will be called as ECO as facilitator. Clear? Hope you'll be now able to understand the difference between facilitator as well as supplier. Now, GST liability on ECO. Right. ECO services for passenger transport services like Ola, omnibus passenger services, red bus we have. How many of you use that red bus? You heard about red bus? A few of you heard or not? Okay, good. And accommodation services, Yatra and Go IBU, and the other one maybe booking.com. Housekeeping service is also now available online, and restaurant services, Uber and what's that, another one, Swiggy. So these are available now. This restaurant service is not only for food, sometimes booking for rooms. All these things are coming under ECO services. Notified service, all these services falls under RCM. Passenger transportation services, that will start with omnibus passenger transport. Only if the service provider is not a company, otherwise the company pays the GST. If the service provider being the company to recipient or other than company, in case of company, forward charge is applicable. Other than company, RCM basis will be applicable. RCM means who has to pay? ECO has to pay. ECO will be responsible. ECO will be responsible person here. In case of accommodation, like hotels, inns, guest house. Okay. Similarly here, registered person to recipient, non-registered person to recipient. Here forward charge, here RCM. In case of housekeeping services, plumbing, carpentry, etc., the same happens here. The same. If the supplier being the registered person, forward charge will be applicable. Otherwise, RCM will be applicable. Restaurant services. Okay. Restaurants located in specified premises. Okay. Where the declared tariff is 7,500 per unit per day, then forward charge is applicable. Otherwise, ECO will be liable. ECO will be liable. Is that clear? So, in case of RCM, ECO will be liable person to pay the GST. In case of omnibus services, omnibus company, omnibus service is provided as a company, the company itself pays the GST, not the ECO. Here only. In rest of the cases, if the supplier being the registered person, he has to pay the GST. Yes, ECO will pay the GST. Here also, passenger transport services. Passenger transportation services will include other than omnibus services like radio taxis, motor cabs, maxi cabs, motorcycles and other vehicles and all. Is that okay? So, what is called radio taxi, maxi cab, motor cab and motor car, omnibus and all. So, you have to understand these terms also a little bit, very rare, very rare. Omnibus. Leaving the omnibus, all these things are grouped into single item. Okay, radio taxi, maxi, motor and motor car, motor cab and car. So, radio taxi, where we have the two-way radio communication in our vehicle or in our taxi is called radio taxi. Okay, and where GPS is also enabled or GPRS is enabled for the safety and security, especially. Okay, the taxi will have two-way communication. The person who is operating that radio taxi, the owner, and then the driver, both can communicate now and then. If there is any mismatch, immediately the owner will call for verification and all. That is called radio taxi. It's very rare here. Now we have the mobile and all. Okay, it is inbuilt in taxi, is called radio taxi. Right. Maxi cab, a motor vehicle designed for more than 6 but not more than 12 passengers excluding driver. So 6 to 12 capacity is called maxi cab, and motor cab will be less than or equal to 6 excluding driver. Motor car excluding transport vehicles, omnibuses, road rollers, tractors, motorcycles are invalid carriages. So these things are called motor car. Any motor vehicle excluding those things. Okay, the listed above will not be included here. And omnibus, a motor vehicle designed or adapted to carry more than 6 passengers excluding driver. This is called omnibus. Okay. Of course, not required to memorize this. Not required to memorize this. Now, GST payment by ECO. I request you to read this at the last. Okay, I request you to read this at the last. GST for electronic commerce operators. Because you need to understand the GST 3B form and 8 form and all. You need to know small logic about filing of returns. Filings of return and the payment of tax and all to understand this chapter. So you can read it at the last. Once you complete all the chapters, if you go, you can understand this chapter easily. Now, so with that, we have completed RCM basis. Charge of tax, including RCM also over. We'll complete some practical questions before we'll discuss some more theory here. Who is liable to pay GST in the following cases? Liable to pay GST. Recipient is located in taxable territory. Service by an arbitral tribunal to business entity. that business entity is in taxable territory, then definitely business entity should pay the GST. Sponsorship services provided by a company to an individual, recipient being individual. If the recipient being who? Company, then automatically RCM is for charge of, followed, but here RCM is not, forward charge will be applicable. Here RCM, here forward charge. Renting of immobile property services provided by the central government to a registered business entity. Central government to business entity, then who has to pay the GST? Business entity under RCM basis. Director sitting fee. Vivek Goyal, a director of A to Z Private Limited, received 1 lakh sitting fee for attending board meeting. Directorship services, where the services falls under RCM basis, so company has to pay the GST under RCM basis. Is that clear? Similar questions you can expect in your examination. So I gave a wider explanation of all these things, but when you see the questions, very pretty easy to answer, right? Now, sponsorship services. Raghu Associates provided sponsorship services to We Win Cricket Academy and LLP. So, recipient being We Win Cricket Academy, then automatically what happens? RCM basis will be applicable. GST liability for GTA services. Safe Trans GTA agency. Okay. And transport goods for Kapil & Co., a partnership firm unregistered under GST. Now, who has to pay the GST? So, partnership firm Kapil & Co. can pay. Registered, unregistered, not a matter. In case of what? Partnership firm. Partnership firm. Already told you, very first itself. This question was very often asked in the exams. In case of partnership firm, that firm may be registered or unregistered, yet RCM basis applicable. On all other cases, registration is must. Yeah. Here, make the correction here in the solution. Now, legal fees received by an advocate. Advocate Shushruth received legal fee from Mrs. Tattva Trading Company. Turnover being 50 lakhs. Automatically, business entity should pay the GST under RCM basis. RCM basis. Who pays GST in the following cases? Who pays the GST in the following cases? Services by an insurance agent to insurance company. Definitely who has to pay the GST? Insurance company under RCM. Services by the recovery agent to a car dealer. Who has to pay the GST? Here RCM basis will come under recovery agent. Recovery agent. Usually make a note, this will be applicable for the banking company only. Banking company only. Is that clear? Anyhow, it's a car dealer. So usually car dealer case is not falling under this RCM case, right? Under RCM. Recovery agent, by recovery agent, recipient being bank company, financial institution, NBFC. So then you can name this being forward charge. Make the correction here. Forward charge. Make the correction here. Forward charge. Yeah. Make the correction. Make the correction. Security services, supply of security personnel to a registered person. Security services, recipient being the registered person, then of course RCM basis will be applicable. In the last case, if the recipient is an unregistered individual, supplier is liable under forward charges. Now, how do you classify the goods you supply? How do you classify the goods you supply? What are the goods you supply? It should be classified properly so that the tax levy will be correct. And whatever the supply you do know, you will have 8-digit code named as HSN code, Harmonized System of Nomenclature. For that, you have to refer Customs Tariff Act 1975. So the classification is borrowed from the old act only, not the new one. Earlier, when we studied excise duty, by the time also we had this Customs Tariff Act for the classification of the materials what we manufacture and sell. Okay. For example, coconut oil. Come on, tell me, is that coconut oil being edible oil or cosmetic product? That's a clarification, right? So you can use the coconut oil as edible oil in most of the South India, especially Kerala. They manufacture, they produce or cook, especially that banana chips and all, with the coconut oil only. So predominantly they will think this being edible oil, eatable one. But in the North India, no one prefers to use the coconut oil while cooking. It may be a cosmetic only, hair oil like they use, so cosmetic. In case of edible, it may be taxed at the rate of 5%, it is 15%. So if you are not classifying properly, then unwantedly you will be paying 15% tax. Isn't it? So the clarification is very, very important. This hair oil or coconut oil will be considered as edible or not. How can we classify that, sir? To classify that, you can go and refer the Customs Tariff Act 1975. The structure, how you learned in case of income tax, we have the section, subsections, classes. Like similarly here, in case of Customs Tariff Act, we have section, chapter, heading, subheading, and tariff item. Okay. So when you want to clarify whether this goods will be falling under edible oil or cosmetic goods, go and see every section and under that chapter, heading, subheading, and tariff item. Okay, the final tariff item is the real classification part for the specific product, along with the applicable duties given there only. Okay, so you have to go and see the section, chapter, heading, subheading, and tariff item. This is nothing but a dictionary like, okay, dictionary like. For your better understanding, let's see how this be. So, how many sections we have? Customs Tariff Act 1975. Here is clear. Usually you will have sections here. Chapter 1, section 1. In section 1, below that a small description is given. By reading this, whether broader classification is accommodating your supply of goods or services. Usually all these things are for the goods only. All these things are for the goods only. Supply will see that later on. Supply services will see it later on. Because earlier we had only tax on goods. Goods are produced. Okay, now goods supplied as well as service supplied. Both will be taxable. In the first case, live animal and animal products. Section 1. In that case, chapter 1 deals with live animals. In live animals, what will come under? Here is a section note. This will be called a chapter note. This is called section note. This is called chapter note. Section note gives the broader outlook what will come under this particular section. Any reference in the sections to a particular genus or species of an animal, except where the context otherwise requires, includes a reference to the young of that genus or species. Not only the grown-up animal, even young one of that animal will also be falling into this. Okay. And it may be dried products, also covers products which have been dehydrated, evaporated, freezed, dried, and packed, tinned meat and all will come under this. Okay, animal products, tinned meats. Here, live animals, this will not fall. This will not fall. Okay, tinned meats will not come. Fish and crustaceans, molluscs. So these are the things are falling under here. Okay, of course, it's only a dictionary. Whenever you manufacture something, you have to check whether it will fall under this. And animals. So, chapter 1, section 1, chapter 1 is noted this way. 01 represents section, 01 represents chapter. 0101 deals with live horses, ashes, mules, and hinds. 0101 2100 represents the tariff item. Okay, section, chapter, finally heading and chapter means the tariff item. The tariff item will consist of how many digits? 8 digits. When it is being the 8 digits, pure bred breeding animals, based on the number of units, it's going to be taxable. What is the tax rate? Free, tax free. And if it is being horses or polo, unit, how do we measure? It's based on the number of kgs or number of liters or quintal or units. So here one horse, the value you calculate on the 30% will be the tax rate. So when you are supplying the horses for polo, in your invoice you need to have that 8-digit number 01012910. 01012910 represents the HSN number for this item, and tax rate being 30%. Is that okay? This is the old one. Okay, old one, but still we follow the same. Here you see, in case kg, boneless, meat of animals and other things, 02 section 2 01 3000 boneless, kg based 30%. Understand? Sometimes it is rather than kg, it may be liter. Okay. So majority cases kg only. Okay. So most of the cases here given as kg as a measuring unit. Or based on number of units. Here, meter squared. Cinematographic film, meter squared, like this will be the unit, measuring unit, meter. So all these particulars are available there. Whenever you are approached to give guidance, you can go and see what product and where it will fall under. Then you can find out the proper HSN code. So what happens here? Section is the broad categories of goods. Chapter being the specific product group. Heading defines a product category and subheading further subdivision of the goods, and finally tariff item. Tariff item will be the specific product classification with the applicable duty will be there. Only when you have the 8-digit number identified, and automatically if you go and see, you will get the rates, not the 4-digit number. If you go to the top 4-digit, means section and chapter only, you don't get the rates here. And interpretation and classification rules. Okay. How can you interpret? We have the general rules for interpretation. Ensuring correct tariff application. How do you classify? Describe, you can go and read your description of goods or characters of goods and its intended use. Okay, for example, earlier we had a lengthy class for this description only, because especially coconut oil, what's the intended use of the coconut oil. The intended use of the coconut oil in north states, okay, north side of India, is for cosmetic purpose, then it will be cosmetic item. For southern India, it will be considered as edible oil. So tax rate will be totally different here or there. And essential character, what about the bag? What about the bag you purchase? Is it bag for what? Bag for your books, or bag for your laptop, okay, or bag for your grocery item to pick, okay, shopping. But there may be some special packages like any playing guitar, veena, and camera. For those things also we have the bags, right? The camera bag or bag for camera is not suitable for others. So then what about the bag specially meant for the camera? That's considered as camera only. As per this one, what is the essential character of the product? It's a bag for camera, so it's a camera. Such a clarification also be required, but of course not required. But here you need to understand how can you interpret the goods oil classification. Description of the goods bag. Okay. Next, what's the essential character of the bag? To cover, especially or protect the camera, then it's a camera only. Next, coconut oil. Then what's the essential character of the coconut oil? Edible purpose. Then it is considered as eatable item. So based on either description is okay, then you finalize that. Else you can go for the essential character of the product or intended use, and what are the components in that material will also be a reason to classify that, right? And usually the rate of duty is determined based on the tariff item. Tariff item. That's how we can classify. Clear? And similarly, in case of classification of services, GST classification of services based on a modified version of United Nations Central Product Classifications. Services fall under Chapter 99. Okay, see here. How many chapters we have? Okay. So how many chapters we have? $98. Is that okay? Because already told during that time it's only commodity. Naturally, service comes with a new idea, new chapter 99. After 99, 98, 99 is for the service. We never bother about the product classifications, coding and all. So we confine with chapter 99. That too small aspect. So then chapter 99 of the GST tariff is coded as per United Nations Central Product Classification Model, but slightly modified. Okay. Major sections of service classification under this: construction services, trade accommodation, French real estate and leasing services, business production and community social and personal services. Like we have been given 9 sections. Have the clarification idea only, not beyond that. It's not expected in your exams. How do I classify, sir? What are the service or supply of goods I do? What sort of goods this is this, and what is the number for that? Any identifiable number is there? Yes, sir. HSN number is there. Where can I go and see? Customs tariff act. For the commodity, up to 98 chapter is there. For the services, section 90, means chapter 99 is there. In that we have some sections, predominant sections listed up. Clear? Now, some basic ideas. Key GST rates for services. Certain specified services are totally exempted nil rate. And we may enjoy the lower rate also, 2.5%. No input tax credit is available. And standard rate for the most of the cases 6%, general rate 9%, and highest rate 14% also possible. Okay, you never bother about the rates for the goods. You bother about the rates for the services. What position levy, and this will be for the exempted goods. And normal ITC, in these cases, you cannot claim the ITC. You cannot claim the ITC. Regular rates being 6 percentage, 9 percentage, 14 percentage. In these cases, ITC is available. ITC is available. Clear. And this is all about CGST. We focus only CGST. Then what is the total tax payable? Equivalent SGST will also be payable, or UTGST also be payable. So 6 plus 6, 12 percentage, 9 plus 9, 18, and 14 plus 14, 28 percentage. If you go to the restaurant, what is the GST rate mentioned in that invoice or bill? In most of the cases, 5 percentage, 2.5 percentage, and 2.5 percentage. So it's all about composition levy. Composition levy where we cannot enjoy the ITC. Okay, even if you are getting it for your business purpose, yet you are not eligible for ITC here, because it's a not regular one, lower rate. So nil rate for certain specified services. We'll study all these things in detail. We have the exemptions chapter separately to be discussed. At least I need 2 sessions to cover all the exemptions. Okay, if you study the exemption chapter yourself, then definitely you'll get confused. Okay, listen my lecture. That lecture is more than enough. Then you can finish off covering around 6 or 10 question papers from your past years. That's more than enough for the exemptions. You cannot read all these things line by line. So this exemption chapter, I need 2 sessions. For all this exempted service, tax rate being 0. And in case of 2 items, GTA and restaurant services only, these 2 services only falls under this category, 2.5 percentage. 2.5 plus 2.5. Okay, currently we have 3 plus 3 also, we'll see that later on. Okay, lower rate. And applies some specific notified services 6 plus 6. Whenever we talk about the general services, always it falls under 9%. It is a default. Okay, not falling under any specific services. And in case of luxury and entertainment services like gambling, betting, casinos, race clubs, totalizators and bookmakers. Okay, totalizators and bookmakers. We'll study that along with the business. What is called business? There we'll discuss what is called totalizators and bookmakers. Admissions to entertainment events like IPL, amusement facilities, sporting events. In these cases, the highest rate will be applicable. Okay. The effective GST rate is doubled when including CGST or SGST along with, okay, it may be usually double. So 2.5, 6, 9, 14. Already we have covered this. Okay. GST rate in real estate sector, 1% GST will be payable. No ITC is available when the house property being the affordable housing. Already we studied, no, the penalty is leviable, exemption. So 1%. What is called affordable housing? The value is less than or equal to 45 lakhs, and then the carpet area being less than or equal to 60 square meter in case of metro city. Non-metro means 90 square meter. 1 square meter is roughly 10 point some feet. Okay, you understand? So 60 square meter means into 10. 600 square feet. Usually we will study in practical life. The flat size all mentioned in square feet. It's not square feet, it's a square meter. 1 square meter is roughly around 10 point some number. Okay. So you can directly multiply with the 10, you will get approximate number. Okay. So almost 60 square meter, otherwise 600 square meter and less will be considered as affordable housing. In case of non-metro, it's 90. Okay. Other than that, this will be considered as non-affordable house properties. Okay. Other real estate or commercial apartments, 5% GST will be leviable. No ITC is leviable here. Applicable to all residential houses other than affordable housing, even commercial apartments, shops, offices, etc. In a residential real estate projects. Okay. Provided in this case, carpet area of the commercial unit should be less than or equal to 15% of the total project. carpet area. Okay, this condition is very important for the commercial apartments. In the case of commercial apartments, okay, usually what happens, ground floor maybe or underground maybe for car parking, and then the first floor or ground floor maybe commercial area, and above that it's a residential flats. Now find out the total carpet area. If the total carpet area being 1 lakh square feet, 1 lakh square feet, in this case the carpet area of the commercial property should be 15,000 or less. Only then this condition is applicable. You have to pay only 5%, else regular tax will be leviable. Is that clear? You have the carpet area means the area where you can lay your carpet, means excluding the walls. Okay, so wall may be 1 square feet, or 1 foot. Okay, 1 foot. Okay, you constructed a room this way. Clear? So this is 1 foot, this is 1 foot, it's being 10, means the full length being 12 feet and inside being 10. Okay, here this may be around 20 and here 1 and 1, then it is 18. 18 and 10, 180 will be the carpet area. 20 and 12, 240 will be your area of construction. You need to understand the difference between area of construction as well as the carpet area. When you go for constructing your house property, right, usually the contractor bill based on this one. 240 square feet constructed, sir, per square feet 3,000 or 2,500, you have to pay me this much. But when you compare the carpet area, it is the area where you can lay your carpet, means the place where you are able to use it. Usable place is called carpet area. Out of the total carpet area, you know, the commercial areas carpet area should be less than or equal to 15%. Okay. Now, so while supplying, you know, you are constructing and supplying the flats. Okay, while supplying the flats, contractor as well as recipient, you construct the flats and supply the flats. Okay, clear? And for this consideration, probably 40 lakhs and GST collected on this being 5%. 2 lakhs. 2 lakhs should be the GST. Clear? Provided the input you get here, you know, input. What input? Cement and capital goods. Capital goods like machines and all is called capital goods. Other input goods or services. Okay. Now, these things, at least 80% you need to procure from registered person by paying the GST. Cement, capital goods, other inputs and input goods and input services should be purchased from the registered persons only, at least 80%. 20% can be unbilling way also. Usually GST on cement being 28% and other inputs and input services 18%, capital goods as per the applicable rate. Sir, what happens, sir, if the number is only 60%? Then automatically what happens, you know, remaining 20% you have to pay under RCM basis for procuring this. 80% of your commodity, your input should be purchased from the registered person. If it falls less than 80%, 70% or 60%, remaining 20% is purchased from the unregistered, means you have to pay the GST under RCM basis at this applicable rate, 28% or 18% or the rate for the capital goods. Is that okay? So minimum 80% of the input or input services must be procured from registered person. If you are procuring it from registered person, you may pay the GST, no problem, under forward charge. If it is not so, RCM basis will be applicable if there is a shortage. And this 80% should not consist of what? Development rights, long-term lease of land, FSI and electricity, high speed diesel and motor spirit and natural gas. Whatever the input you know, whatever the amount you spend for constructing, you know, that should not include what? Development rights. So you have to get the approval from the government for construction. For that, there's a fees that is not your input. As well as long-term lease, you are paying for the land to the owner, also be not considered as your input. And FSI right not being considered as your input. Okay, floor space index. And the amount payable for the electricity, diesel, motor spirit, and natural gas. All these things are already excluded. So these things will not be considered. Whatever the amount you spend for constructing the flats, you know, leave that remaining value, verify whether 80% is received from the registered person. Yes, sir. Then no problem. No, sir. Only 60% registered. Remaining 20% you have to consider for the RCM basis. Only then you will be able to pay 5% GST for the final goods. Clear? So with that, this topic is completely over. Let's move on to the composition levy. Composition levy. Now, composition levy. What is the eligibility for composition levy? Number one being eligibility for composition levy. Okay. Number two being conditions to add for composition scheme. Number three being alternative composition scheme. So only the three, first of all, you have to understand. Now, composition scheme is nothing but the scheme paying tax at the lower rate, not the regular rate. You pay the lower rate. It's called composition scheme. Okay, you pay the lower rate. A registered person with aggregate turnover is less than or equal to 1.5 crores in the preceding financial year. We are talking about the previous year 24-25. Leave that year, preceding financial year 23-24. In this year, the aggregate turnover is less than or equal to 1.5 crores. Then in this year, he can enjoy composition levy. There are lots of benefits available to the composition levy taxpayer. Okay. So he needs to file the quarter reports also quarterly once, not monthly once. If you are being the regular taxpayer, you have to file the returns monthly once, but here you need to file only once in 3 months, and lots of flexibility is also there, and tax rate is also lower, not the regular tax you pay. Is that okay? So in the prior to the previous year, your aggregate turnover is less than or equal to 1.5 crores, then you can enjoy the scheme of composition levy to pay the lower tax. But if you are paying the lower tax, recipient cannot enjoy the ITC. If you are paying at lower rate, recipient cannot pay the ITC. Okay, cannot enjoy the ITC. If there is no GST payment, then automatically what happens? Recipient cannot enjoy the GST. No, similarly, the lower tax rate is considered as no tax only for the recipient. Is that okay? This will be applicable. This particular first point is applicable as per section 10 only for 3 persons. Okay, manufacturers, caterers, and traders. Come on, tell me. Is there any service provider? We don't have the service provider. Who is called trader? The person who buys the goods and sells the goods is the trader. So naturally what happens? Service provider will not fall under this case. Only one service provider falls here, who is called caterer. So all the manufacturer except specific goods manufacturer should pay only 0.5% of the turnover in the state or union territory. Only 0.5%. So 0.5 percentage plus 0.5 percentage, only 1 percentage. C. Rather than paying 18 percentage, just 1 percentage means so much of benefit he enjoys. But definitely recipient cannot enjoy the ITC. Only 1% no, he is not eligible to enjoy any benefits. In case of trader, also 0.5 percentage. In case of caterer, 2.5% of the turnover. So now you can remember very easily or recollect easily. Go and see any food bill. Okay, if you are ordering in Swiggy or Zomato, whatever it may be, or if you go to a restaurant where the means this GST bill is there, always cross check. It is 2.5, 2.5 only. Can you remember that? Or otherwise, you now go and see. Okay, it means that restaurant is paying the tax under composition levy. So what happens, sir, if I go to the star class hotel? No problem, you have to pay at 18% or 28%. It's for the composition taxpayer. Means the caterer supplying the goods in a year less than 150 or 1.5 crores, 150 lakhs. Okay. If his turnover is more than 1.5 crores, naturally what happens? This 2.5, 2.5 will not be applicable. Regular tax will be applicable. 18% will be applicable. You understand? Clear. If you have the chain of hotels, okay, the summation of the total transaction value of all this hotel put together is more than 1.5 crores, then naturally I fall under 18% category, 9% plus 9%. Clear? Now, predominantly we have the goods only, no? Predominantly we have the goods only. In this case, composition levy is applicable for the goods manufacturer cum trader. But in case of service, very rare, only for caterer. Caterer. Is that okay? So service people cannot enjoy, the person who supplies the service, supply of service will not be able to enjoy the composition levy. Cannot enjoy the composition levy. Sir, I supply goods, some part service also there, sir. What happens? So in this case, okay, the total turnover where whichever is lower of what? 10% of turnover or 5 lakhs, whichever is higher, whichever is higher extent. If the service value is there, then you can still enjoy the benefit. Okay. For example, you see that AC trader, he sells the AC for around, he sold 100 ACs, per AC rupees 1 lakh. 100 lakhs is the total sale value of the ACs. And apart from that, he collects the service charges for installation around 2000 rupees per installation. So 2000 into 100, 2000 into 100, 2 lakhs. Now his gross turnover being 1 or 2 lakhs. Will he be able to go for composition levy? What is the total turnover? 102 lakhs. What about the turnover for service? 2 lakhs. But what is the maximum limit he can have the service in his own turnover? Whichever is higher of, number one being 10% of the turnover, 102 lakhs into 10%, 10.2 lakhs. Another one being ceiling, 5 lakhs. Between these two, whichever is higher, 10.2 lakhs. Here, the service collection is only 2 lakhs. As service collection is only 2 lakhs, which is less than the stated limit, so still he can enjoy the composition levy. If I am being the goods provider, supplier of goods, I may have small portion of the services also. That's why if you order any AC in Amazon or Flipkart, you can see. Okay, you can see the AC cost being 50,000 rupees, installation cost is 1,000 rupees. You know that the installation cost is 1,000 rupees. After installation, if you find any trouble, if you call for small correction, that fellow charges 3,000 rupees. Because they want to keep the installation charges while selling the commodity much lower to enjoy this benefit. Enjoy the benefit. Hope you will be now able to understand. Clear? Now, usually manufacturer or trading of goods not being specified goods. What is that specified goods? Very easily you can remember these items: pan masala, tobacco, aerated waters, all these things. See, pan masala and tobacco. With that, aerated waters and ice creams also added. So very harmful, like pan masala, right? Don't drink. Okay, ice cream, and don't eat ice cream. Don't drink aerated waters. Apart from that, fly ash bricks, fly ash aggregate, fly ash blocks, bricks of fossil meal, and similar siliceous earths, building bricks, earthen or roofing tiles. All these roofing, the construction related items you can remember, okay, very easily. Fly ashes, like, okay. So these are called specified goods. These goods will not fall under composition levy. They have to go for the regular tax liability only. Clear? Clear? Hope you'll be now able to understand who are eligible for composition levy. Number one, their turnover in the preceding financial year should be less than 150 lakhs, less than or equal to 150 lakhs. Second being, manufacturer traders are eligible at the rate of 0.5 percentage plus 0.5 percentage. In case of caterers, 2.5 plus 2.5 is applicable. And if you are being the specified goods dealer, you are not eligible. What are the specified goods here? Ice cream, pan masala, tobacco, aerated waters. Apart from that, the fly ash like for the construction industry. Okay. Now, even though if you want to go for the composition scheme, other condition also be you have to fulfill, that is given under class 2, section 10, class 2. Okay. Clear? Engaged in taxable supply. Engaged in taxable supply. If you are not engaged in taxable supply, you are not eligible for this. Your turnover is 120 crores. Sorry, 120 lakhs. Okay. Less than that. But you are selling only alcoholic liquor for human consumption with a license from government. You are not eligible for registration because you are not falling under this case. You are not at all taxable person. If you are doing any taxable supply, only you will come. If you are doing no taxable supply, you will not come. In case of petroleum products also. Okay. And no interstate outward supplies. If you are supplying outside state, then you are not eligible for composition levy. Even if you are selling 1 rupee worth of goods to outside state, you are not coming under composition levy. You have to go for the regular levy, pay the regular tax. Okay. And you should not sell through e-com operator. If you are doing the business through e-com operator, you are not eligible for the composition levy. You have to go for the regular levy. And you should not be a manufacturer. So this one being the same. You should not be a manufacturer of ice cream, pan masala, tobacco, and aerated waters. Okay. If you are manufacturing, then of course you are not eligible for the composition scheme. And casual taxable person and NRTP, non-resident taxable person. Okay, both are same. Casual taxable persons are being the supplier, supplying only for a specific period, 3 to 6 months. And non-resident taxable person is also a casual tax person, but not being in India. He is from outside India. Some non-resident coming to India doing a short-term business for 3 or 4 months can register similar to the casual taxable person. The process will be the same for the CTP and NRTP. We can call him in short as NRTP. CTP and NRTP both are same, but CTP from India, NRTP from foreign. Okay, they are not eligible for the composition scheme. And all registered businesses under the same PAN must add for composition if one does. Okay, so if I have the PAN number, PAN based GST number will be applied. So I have 3 or 4 different branches in 3 or 4 different states. So I have to get the GST number for the 3 or 4 different states. Different GST number I will have. But I have to get composition scheme for Tamil Nadu, means I have to get the same composition scheme for all the 4 states. Okay. I cannot say, sir, for Tamil Nadu, I can go for the composition scheme, sir. For Andhra Pradesh, for my business, I can go for the regular tax. No, it's not possible. If you have for the composition scheme, you have to have for all the branches put together. Is that clear? So, second point is the conditions. You need to have the taxable supply, and you should not involve in interstate supply, outward supply. You can purchase from outside other state, but you cannot supply to the outside other states. And third being, you should not sell through e-com operator. You should not be the manufacturer of these specific goods. and you cannot be CTP and NRTP. If you are being the CTP and NRTP, you cannot fall under composition scheme. And if you have the composition scheme for one of the premises or one of the places, then you have to have for composition scheme for all the places. Is that okay? Sir, what happens, sir, if I am being the service product? Will I be able to enjoy the benefit? As per this condition, I cannot enjoy the benefit for composition scheme being the service product. Then no problem. One more section comes here for you. Okay. Alternate composition scheme. Section 10 class 2A. What does it mean? For those not eligible for the above composition scheme can fall under this, provided here the tax rate being 3% plus 3%. There it is only 0.5, 0.5 and 2.5 and 2.5. Here 3 plus 3 and there 1.5 crores. Here it's only 50 lakhs. Okay. In the preceding financial year, his aggregate turnover. What is called aggregate turnover? We will discuss that in the next class. All those things are already given in the definition section, the first chapter. So in definition, some definitions are most important. We have to cover subsequently. Now and then I covered something, right? Like goods, services, and family. All these things covered, and few more other items also to be covered. I'll cover in the next class. What is called aggregate turnover? Aggregate turnover is very, very important for subsequent understanding. That 50 lakhs, 150 lakhs, and sometimes 20 lakhs. All these things are linked with aggregate turnover, right? Eligibility conditions same as the above, the same. CTP not eligible, NRTP not eligible, specified goods manufacturer not eligible. The conditions will be the same. The same condition can be used here also. The person who is not eligible due to this condition will be eligible for acting under this provision. Clear? 3 points. 3 points are predominant. 4, what could be that? In the preceding financial year, 24-25, you're supposed to enjoy the composition scheme. Then 23-24, your aggregate turnover ATO should be less than or equal to 50 lakhs or 150 lakhs as the case may be. Then you can eligible for composition levy in this year. But in this year 24-25, if your aggregate turnover crosses 50 lakhs or 150 lakhs as the case may be, the moment it crosses, probably on 1st October 24 it crosses. Okay, 1st October 24 it crosses this one. Thereafter you will be not able to enjoy the composition scheme. In the current year, the moment it crosses the limit, automatically you lose the composition levy. Thereafter, you surrender your composition levy scheme and shift to the regular taxpayer. Okay, the limit is there. The moment the limit is crossed, then you will be losing that one. Or you should not supply outside state. Okay, you should not do interstate trade. If you are involving interstate trade, then automatically it is lapsed and you have to go for the regular taxpayer. So, lapse of composition scheme. Aggregate turnover exceeds 1.5 crores or 50 lakhs under section 10 class 2A. Then automatically your composition scheme is lapsed. Now, what are the restrictions you have in case of composition scheme, sir? Cannot collect the GST, cannot claim the ITC. In case of composition levy, for example, restaurant A supplies the goods to B, food, who is being the regular registered person. Okay, they levy the bill. Okay, consideration being 10,000 rupees and GST being CGST and HGST being 18% at the rate of 18%, 1,800 rupees. A can collect 10,000 plus 1,800, 11,800 rupees from B. Is that okay? Suppose restaurant A supplies the goods to B, where the restaurant A being the composition levy payer. The consideration being 10,000. Come on, tell me, what is the GST rate applicable for the composition levy payer? It's only 2.5%. Can he collect 5% here? No, he cannot collect 5%. Only 10,000 he can collect. The amount what he collected is considered as inclusive of GST also. In the 10,000 rupees, A has to pay the GST to the government, say 500 rupees. So he has no power to collect. Sir, in our invoice, no, there is a 5%, sir. No, no, no. MRP is 1,000. They have broken because the machine is prepared such a way that the original value plus GST and all will be printed in the invoice format. But they cannot change the machines, you know. So when you go and see the bill, the MRP being only 10,000. Okay, your final bill also 10,000, but while billing, it will be appearing like this. Okay, CGST, SGST, and balance will be for food amount. Overall being 10,000. It's calculated in a reverse manner. This will be 95. That's how it is calculated. For adjusting for what? Machines. But it's illegal. It should not show. You should not show the GST in your bill. Okay. Here it is shown properly. This is the GST number collected. This is the GST number of mine. I collected the GST from you. This is going to be deposited to the government. But here, I cannot show this GST number 2.5 separately in the invoice. Is that okay? If the bill is, see, if you see the MRP being 100, if 5 rupees additionally collected from you, it's illegal. It is illegal. Is that okay? Otherwise, they are unaware. We have the chance to now guide them to for a fees. Huh? Right, you understand? So, cannot collect GST from the customers. This is the situation. So, bill looks like this one. So, it's just a manipulation. Okay. Cannot claim ITC also. You cannot claim the ITC as you are not able to collect the GST, as you are not able to collect the ITC also. And the person who purchases it from you, he is also not eligible for the ITC. So, what happens here? Supplier, recipient. And this is composition levy and this is regular taxpayer. Regular taxpayer. You cannot claim the ITC and you cannot claim the GST also from your customer. This subsequent buyer cannot claim the ITC. Of course, he can collect the GST from his own subsequent buyer. As supplier, you are not able to collect the GST. You are not able to collect the ITC also for your input supply. And your recipient is also not eligible for ITC. But of course, if he is being the registered person, he can collect the GST. Okay. Now what happens, sir? Wrongly I collected. The person wrongly acts for the composition scheme. The proper officer may impose penalty after recovering all this debt. These are the 6 points we have to understand in case of composition levy. The related illustration and other variations will continue in the next class. Okay.